Ladies and gentlemen, please welcome President and CEO Hilton, Christopher Nassetta, in discussion with CNBC Global Markets reporter Seema, Mody.
All right. Hello, everyone. Good to be here. Chris, good to see you.
Nice to be here, Seema.
You have the session right before lunch, so we got to make this really exciting.
I'm not sure if this is worse or getting the one right before the cocktail reception.
No, this is better.
Maybe this is better. And Seema, I'm really pleased when they told me you were going to do this. I was thrilled because I get to be on stage with you, not for one of our 5-minute,
fast-paced.
You interrupt me every 10 seconds. And I
never do that.
I get 25 minutes to hopefully wax eloquent.
Yeah.
Slightly more loquacious.
Exactly. Well, I mean, talk about an American brand, Chris. Hilton was started in 1919 in little town Cisco, Texas by a man named Conrad Hilton, which means 2019. We're talking about the 100th year
we are
for
indeed.
Hilton.
You did your homework. I love that. I love that. Yeah, this is a very important year for Hilton. Of course, I wasn't here for the whole 100. I've been here for 12. And I know I'm looking older with this gray hair, but in fact, only 12 years. But it is a milestone year for us in a lot of ways. I mean, you know, the truth be told, not that many companies, people, whatever, make it to 100 years old. So I think that in and of itself is a big deal. Many in this audience, I'm looking around, there's people of all ages, but many would maybe not know this, but in so many ways, our founder and Hilton sort of invented the business as you know it. I mean, the things that you take for granted, like an airport hotel, a full-service hotel, a reservation system, room service, having ironing boards in rooms, for that matter, the pina colada, the brownie, I could keep going. Like Hilton invented all these things. So, you know, in a modern context, you don't think about it, but if you go back 100 years and you really look at the history, which of course we've done, you know, we invented much of the hospitality industry that you see and experience today. But more importantly, and I could see you want to keep going, but we're not doing the 5-minute interview, remember?
No, continue.
But more importantly, because this is the part that is worth getting to, our company was founded 100 years ago, and if you go back and look at all the history of it, Conrad Hilton founded the company and said, I want to do this because I think I can make the world a better place. That was sort of the purpose. Everybody talks about purpose today, and I think the word gets really overused, but you can go back, not reconstructive history, you know, of us looking back in time and saying, let's make up a great story. Reality is, if you go back, contemporaneous with the founding of the company 100 years ago, his whole philosophy is, I can make the world a better place, and that's why he founded the company. So you fast forward over 100 years, think about the impact. We've served 3 billion customers. What have we done? We've allowed people to see the world in a safe and secure environment, to have a better understanding of the world, to have cultural exchange, honestly, in a way they never could before. We have hired, trained, and developed 10 million team members. What have we done for them? We've given millions and millions of people a line of sight to a better future. We've had, over that 100 years, $1 trillion of economic impact in the world. What does that mean? That means we've been investing in the growth and development economically and from a jobs point of view in thousands of communities. Communities, by the way, in many cases throughout those 100 years where nobody else wanted to go. Sure. Today you go all these places, you think, of course, I can stay at 5 hotels. Back in the day when we were doing it, nobody would go anywhere near a whole bunch of these locations. And so when you think back on it, with a goal of, I want to make the world a better place, and you think about the impact, not just the numbers, but you know, the real impact on people's lives and communities over that 100 years, it's awe-inspiring. And what's fun for us, and the reason to punctuate a milestone year, is not all that, because I was only part of 12 years of that. I'm proud of the 12 years and what we've done. It's the fact that not only are we 100 years old, and most companies never see that milestone, but we are more dynamic and doing more and better things than we've ever done. And that the next 100 years, which are more important to me than the last 100, we can have even greater impact. I mean, the fact is, in terms of what we're doing around the world, we're growing faster than we ever have. We're approaching opening 2 hotels a day somewhere in the world. We are innovating more than we ever have. We launched 3 brands in the last year. We have a couple more, which maybe we'll talk about, that may be coming in the not too distant future. We are innovating with game-changing technologies, which we can talk about with digital technologies, connected room, digital key, digital check-in, select your room, and a whole host of other things that I would argue maybe others are doing, but are not doing it in a system-wide, global basis. And we are, in the way we always have been, sort of pioneering these things. And most importantly to me, and last, on this part of it, is that we have built, we're a business in the end, no matter how much it's about technology and marketing and all the things that go into making our business successful. The most important thing is the people. We're a business of people serving people. The reason our customers keep coming back, the reason our brands are the best performing brands in the business is because, yes, of course, we give them good product, we give them technology, we make it functional, but its service has to be better. It's people serving people, and the most sort of important milestone for us, and the thing I am most proud of for our team, not for me, but our team, is that our culture is really a world-class culture. We have opportunities to make it even better, but we were named the #1 great place to work in the United States this year. #1. We're the first hospitality company in history to have that ranking. We're the first non-technology company to have that since 2004.
Pretty commendable.
And we're #2 great place to work in the world. So this is not a United States phenomenon. This is a phenomenon all around the world. And as a company that understands from our very origin, it's about the people, and it's about ultimately authentic, heartfelt experiences for our customers. Building a great culture is absolutely mission critical.
And with that comes making sustainability a bigger priority as well.
Indeed. In fact, I'm going to give you a little bit of a scoop sitting right here. We are going to announce, as soon as I walk off this stage, that we were named the industry leader, #1 in the industry in the Dow Jones Sustainability Index, which we're quite proud of. And so the question is why? And the answer is because we are hyper-focused in the area of sustainability. Because here's the thing, if we have a tremendous amount of wind in our sails, I think, as an industry. I think you'll hear this, I suspect, from everybody that's going to be on this stage over this couple of days. It really is a golden age of travel. I mean, there are, people emerging into middle classes at an exponential rate. Everybody wants experiences. People say young people want experiences, but the reality is all people want more experiences. People are spending more money on experiences than things. All of that bodes incredibly well for travel and tourism. I mean, we're the penultimate experience. But reality is there are risks to the golden age of travel. And the greatest risk is that we're not responsible with the environment. And that ultimately, as a result of all of the growth in our business, we shut ourselves down because of the environmental impact. And so I happen to believe that we all need to do our part. Me, Chris Nassetta as a person, but also as the CEO of Hilton. But even if you didn't believe that personally, the reality is our industry that is going to experience such amazing tailwinds would ultimately, I think, not be able to pursue the opportunities if we're not responsible. So we have been very focused on this. We set some ambitious 2030 goals that line up with the Paris Climate Accord, and those goals were really simple on environmental, to have our impact between now and 2030, and to double our social impact investment.
And that's certainly a priority for you, even as chairman of WTTC. Keeping those goals in mind, Chris, right now we're kind of in an environment where we're talking about the outlook of the US economy, the state of the consumer, and achieving all the goals you outlined, experiencing their world and going overseas and staying at all these great properties. But how would you characterize the health of the US consumer right now when you have some of the sort of this clouding effect about what could happen next?
Here's what I'd say, and you know this about me, as does anybody in the audience that knows me. I'm an optimistic person by nature. So,
but based on what you're seeing,
and I remain reasonably optimistic that if the base question is how's the U.S. economy doing, which I think sort of underneath that, and a good question. I remain reasonably optimistic that the U.S. economy is in decent shape and will stay in decent shape at least for a period of time. Having said that, I think it is hard to argue that we are not towards somewhere in the later stages of what has been a very prolonged cycle of growth. Maybe it has not been super robust, by the standards of prior recoveries, but it's been longer than most. And so if you aggregate it, we've been in a very long cycle of expansion, and those don't go on forever. But
Are there signs that the consumer?
I'll get that. I think we're in reasonably good shape, but there's a lot of things happening in the world that you talk about on the show every day, and that we're all reading about, that that are cause for concern. So if you said to me, do I have more worries than I might have had a year ago? Of course I do. Are there more caution flags out? Of course there are. I think the fundamental underpinning of the economy is reasonably good. The housing market's reasonably good. The jobs market is as good as it's been in 50 years. Corporate profits, maybe not growing at the same rate, but are very, very strong. Liquidity is strong. Savings rates are up. So the core underpinnings from a consumer and business point of view, I think are actually, and this isn't just me being an optimist, I think they're actually quite good. The issue we have is to a degree, we're at the end of a long business cycle, and do we will ourselves in to a down cycle? And because markets do not like uncertainty. And so what you see right now is, I think, excessive amounts of uncertainty that are creating trouble in the markets. Now you see it in the bouncing around of the equity markets, but you also, I think, and if I look at our business, you are definitely seeing it in the behavior of customers, both leisure and corporate customers. What do I mean by that? What I mean by that is it's choppy. Like, it's still growing, it's still positive, but unlike a year or two or three where it was pretty consistently positive month to month, week to week, and month to month, I would say objectively right now, it's more choppy. There are some weeks that are weak, some months that are weak, and what's behind it? I think that both business and consumers broadly have caution flags out. They're reading about, there's an election cycle gearing up. They're reading about trade wars. They're reading about, things happening in Saudi Arabia, issues with Iran and broadly in the Middle East, and a whole bunch of other things that make them nervous. And when people are nervous and there's uncertainty, what is the natural human reaction? To pull back a little bit. And so I do think we're seeing, because of that uncertainty, a little bit of pulling back, and it's creating some choppiness. Again, I'd sort of finish how I started. If you sort of ignore the noise, right. Not that you hear on CNBC, of course, that's never noise. If you get to the underpinnings, they're quite, you talk to any economist about housing, employment, all the things that would typically make you really nervous as an economist, that you're sort of teetering, all of those actually look good. All of those actually are quite constructive.
But that choppiness that you reference, how does that play out in the travel industry? Is it American travelers opting for domestic versus international trips? Is it shorter duration trips in general, looking for 3-day family vacations versus 5-day? How do you see it?
I wish I could give you, it's
occupancy levels?
Hard to say, because it's a fairly recent phenomenon. If you look at historically, it's a little bit of all of the above. Historically, when people start to pull their horns in, become a little more cautious, it's a little of all that. They maybe don't do the incremental business trip or the incremental vacation, or if they're going to do it, they pull back and they do a long weekend instead of a week. It's all of those things. To be clear, I'm not seeing those things yet. Or if I am, I can't. There's not enough data to get underneath it, because what I'm talking about is, literally weeks of data, weeks of behavior, and weeks of behavior can be a trend, but they're not necessarily a trend. They could be caused by a lot of different things. So I think, as I say to my team, including yesterday at our executive committee meeting, I think we just have, we're watching it, super carefully here through the fall, when you get into the meat of the travel season and then the leisure season later in the year, to see what behavior is. Now, I can't be on stage with you and not sort of talk a teeny bit about Hilton. The nice, because that's my job. Mm-hmm. So the nice thing, and I'm remembering to my team that's probably out there saying, is he going to talk about us? The nice thing about our model is It's a super crazy resilient model. So, 2.5 years ago, we broke Hilton up into 3 big pieces. The consumer branded business, a real estate business, and timeshare business. And they're all 3 great businesses, but they're all 3 very different businesses. The real estate and the timeshare business obviously have operating leverage and greater volatility just given the nature of the business. The consumer branded business has a lot less of that. And so when I look at, if you look at our growth, right, if you go to the bottom line and figure out like we're growing, our EBITDA 10% or whatever, plus or minus 10%, the 70 or 80% of that growth has been in the form of new unit growth, which is quite resilient even when things start to slow down because so much of it, you have years literally of a pipeline that's in production and it just can't shut down. It's in motion. And so the reality is we have been for the last couple of years, honestly, experiencing relatively modest same-store growth. We've been delivering what I believe is very robust bottom line growth because our unit growth has been so strong. And that's because we do, if you talk to the owner community, I was with 3,000 of them last week in Orlando for our owners conference, we have the best brands. We drive the highest market share of anybody in the industry, so it attracts more capital, and that capital is quite sticky. So we worry about the economy. I look at it just like you do. It's a great question. But the real truth is, from a pure Hilton point of view, the business is built at this point in a way that's really resilient and is, the slight ups and downs in the economy and same-store growth actually have very little impact on our business.
All right, we're now going to play a game called Rapid Fire, all right?
I'm
Quick
not
question.
really good at that.
No, you're great. Today happens
Nothing rapid.
Today happens to be a Fed day where the central bank is expected to cut rates. What does it mean for you and your business? You invest more, less, take advantage of the debt market?
I think that whatever they do today doesn't mean much for our business.
Okay.
Nothing. Won't change. It won't. A minor rate decrease will not change our behavior.
But there's a lot of supply coming to the market at a time when revenue per available room, the big RevPAR industry metric we all watch, is actually below 2% for the first time
There
since
really
2009.
isn't as much product coming to the market. So you didn't do your homework on this.
Supply is up.
Supply's up. Supply is going to be below the 30-year average of supply in the United States. So supply this year, I think, will end up being, as compared to capacity, current capacity, 1.9%. The 30-year average is a little over 2.
Year over year.
Reality, there are markets, since you sit in New York like most New Yorkers, I apologize to all New Yorkers, like this is the center of the universe. New York has a lot of supply, and there are a few other markets around the country. The reality is, in the country, unlike other cycles, and this is a really important point in our industry, unlike other cycles, the supply never got out of control. And that's mainly because there wasn't enough money for it to get out of control. So supply is generally quite modest and going down. By the way, you've hit the peak. So the 1.9 will be lower next year and the year after just because of the cycle time it takes to build these things.
China, what are you seeing on the ground? You about 95,000 rooms by year end. Is there a rise in anti-American sentiment as we see this trade war prolong? I
have not seen that in any way, shape, or form. So there's 2 parts, like all our business all over the world, same store, new unit growth. And we, our same store growth in China this year will definitely be lower than we've seen in recent years. Unclear what has to do with a trade war versus just a slowing Chinese economy. There's no question the Chinese economy is slowing, and the knock-on effect you see in our same-store results. In our new unit results, we'll actually deliver almost a third more rooms this year than last, and I suspect we'll do similar to that next year. We have an incredible growth trajectory. We're doing it, it's all with Chinese partners. It is no foreign money. It's all domestic Chinese investors. And I ask my team, literally, I talk to my Asia team like I do all my teams twice a week. I ask them almost every time I talk to them, are we seeing anything in the environment? Like, are we, as a US-based company, are people, not staying with us? Or are we not getting development deals done? And the reality is, we haven't seen any of that yet. None of that yet. What we have seen is the Chinese economy has slowed down.
Right. What keeps you up at night? Is it competition with the online travel operators or Airbnb's IPO next year?
Nothing really. Honestly, I sleep like a baby. I sleep for 2 hours. I wake up and cry myself back to sleep. Another 2 hours. I'm kidding. I sleep not as long as I want, but I sleep quite well when I sleep. And nothing, I mean, the reality is, you know, we're not perfect by a long stretch. Hopefully all of you are customers and know that, but we do a pretty darn good job. And the things that we can control, I think we do a good job with it, and we work really, really hard at it. And the things that we can't, many of which we've just talked about here, I learned a long time ago, maybe 20 years ago, I wasn't quite as mature as a leader. I can't do much about those things other than build a business, build a culture that is resilient against anything, you know, and can handle anything that comes. So I really, you know, I think we're doing well, and there's bad things that could happen in the world, and there's a lot of noise, but the reality is I think we have built a wonderful shield as a business to all of those things by building a model that's resilient, and most importantly, a culture and a group of people that are purpose-driven, that want to do great things and that can ward off a lot of bad things.
In May, you had said that Hilton will not follow Marriott into home sharing.
I thought I could be evasive, but you're not going to let me out of that, are you?
Is that the case? Still the case?
Still the case. You know, here's the thing, whether we're launching a new brand, what we do with our existing brands, this will be shocking to everybody in the audience, all driven by what our customers tell us they want. So we talk a lot to our customers, whether we talk to our competitors' customers, we talk to everybody. And what, in an oversimplistic way, what our customers are telling us, and I got a bunch of them here, so you may or may not agree, but this is what in mass they tell us is, they neither need nor want that from us, that they view that as something different. They view what we do as providing the premium product with all of the amenities, with all the technology, loyalty program, wrapped in, you know, authentic, heartfelt service delivery at whatever price point it is. And for that, they pay a big premium. You know, on average, we get a 15% premium system-wide. And they're willing to pay that because it's reliable, it's friendly, it's, you know, what they want from an experience point of view. When they're going to home sharing, by and large, it's a great business. But what they're saying is, we go there for a different reason. We know we're not going to get consistent product. We know we're not going to get the service. We know we're not going to get all the amenities, loyalty. I guess someday they could do that. We're not going to get those things, but we're getting a value proposition. And for a certain trip occasion, that's what we want. It's just not what we want from you.
But so the millennial who wants to stay in a villa or a tree house, what do you say to that?
It's funny. I've sat in, personally done focus groups with groups of millennials, and when I ask them and frame it, they too say, we like that, we use it, it's a value proposition, it's something different than we want from you. And there's room for both of you. And when I say, should we connect the dots? Should we be offering it? The very strong answer across all age groups, and we're not just asking, you know, X or Y, across all age groups, and I've personally been involved in this, is no, we don't need it or want it from you. By the way, if our customers we thought were telling us something different, I would have a different answer, but we keep asking, and it's not like we wait, you know, do it every, you know, we're in constant communication. I'm also a believer in, you know, like what we do is different, you know, in terms of connecting all those dots, and that's why we get the premium. And I've said this many times, I'm a big believer in focus. So we can do a lot of things as an organization, but we can't do everything, no matter how big we are. I've always found as a leader that, you know, when you're running a company that's in, you know, 420,000 people in 116 countries, this is a big, crazy, large, hard to manage thing, and you got to be focused in the efforts. So I've always felt like, you know, in this case, like customers are saying, we like what you do it better, and I would rather have our time and attention focused on doing what we do that's at the core of our experience and doing it better, because even though we're the market share leader, I think we can do it better, right? And so before I'm focused on trying to, you know, boil another ocean, I'd rather get our stuff really, really as good as it can be.
Chris, quick word on climate change, the destruction caused by a number of hurricanes, this time Bahamas. It generally is a hotel owner who pays the insurance and not the brand for the damage that's been incurred. Over time, does it no longer make sense to build new properties in these coastal cities that have a high risk of flooding? I mean, is that model going to change?
Well, of course, I don't know the answer to that. I mean, based on talking to all of the actuarials over a long period of time, been doing this a long time, and my history is I grew up on the other side of the business, so the ownership side of the business, and I was involved in a company that owned a whole bunch of properties in the coastal regions. And while with global warming things are changing, they're not year to year, they're not changing that radically. The Bahamas is a horrific situation. We're very involved in the relief efforts there. But the answer is, you can't, like, nobody knew this storm would hit the Bahamas this way, or that way, and ultimately, it's hard to model exactly where these things are going to be. Clearly, it's increasing, and I think it is informative in the sense of where on the coast one would build. I think it informs construction standards, maintenance standards, and other things. I do not think anytime soon you're going to see people say that we're going to pull out. I do not think that these will become uninsurable risks. The typical, sadly, you have a lot of damage and rates go up, and then you go through periods of time where you have a lot less damage. You have hurricanes, but they're not making landfall, and rates go down. I don't think fundamentally that will change. What I do think, and the Bahamas is a phenomenal example of it, and Florida, I guess Miami was probably Hugo, I can't remember which one, that destroyed the Miami area. You learn from it. In other words, construction standards. The standards that were built out of that destruction in Miami have been incredibly powerful in terms of survival of structures and creating a safe environment for people so that they are unharmed. And I think you will see a lot more of that. You will see in the Bahamas, sadly, particularly in Marsh Harbor. I've been going there since literally I was a little kid, and I have a lot of friends in Marsh Harbor. Sadly, most of them now gone. The standards there were nowhere near up to snuff, and so you see the result of that. So I do not think you'll see people say we're not going to be there. I do think it will inform much higher standards of construction.
Chris, great conversation. Unfortunately, we're out of time. Thank you for joining us today. Chris Nassetta, CEO of Hilton. Thank you.